Hello and welcome to another update video on Bitcoin. We're looking here at the daily time frame and Bitcoin continues to hold above the September low. Now it's Saturday. I think it's time to check the fear and greed index. Last time when I showed it to you, it was just a few days ago. The market showed extreme fear, right? Hold on, that was on the 17th of October. It was extreme fear. That was pretty much the low. I just checked in our member area here on the second screen. Yeah, I showed it to you on the, I've changed the, so that's fine. I showed it to you on the 17th of October, and extreme fear often is an indicator of lows forming, even if it's only a local low, and is potentially even a sign that we have the right sentiment for a low to form in a bullish market. Because if we're in a bullish market, extreme fear often is just needed to remove the tourists, from the holders, okay, or from the traders. So, we just need to, just flush out the tourists, essentially. That is what often happens in larger corrections. I mean, again, this correction started around the 15th of August. We might argue it's still unfolding. There is at least nothing clearly impulsive from any of the lows. But yeah, we were in extreme fear, or not necessarily we were, but the market said participants were, right? The indicator. So let's double check the fear and greed index. What does it say today? So obviously here you can see the fear and greed index, which kind of, it's an indicator that is measuring sentiment among traders and investors in the Bitcoin space. And very often what you see, especially in a bullish market, you will see around extreme greed, which is very green, dark green. You will see tops form, not necessarily always at the top, but sometimes it's already starting then to reduce a little bit, because usually what we want to see in extreme greed, a very aggressive rally. That's what we saw, for example, in 2020. But what we often see is when extreme fear shows, this is where in bullish markets lows form. Yeah, even if just local lows. And that was, again, the 17th of October low. And we're now back to fear. From extreme fear, I think the value was around, hold on, I've got it open here, 22. So the value was around 22. We've now moved up to 37, which is getting closer to the neutral space again. But it still feels like, market is, or people are frustrated, right? It seems like the 10th of October low has damaged morale in the sector, because essentially the exchanges failed and, charts failed essentially, or not necessarily charts, but the order books failed, right? Order books failed and it was just a complete wipeout. And so anyway, we haven't really recovered much, but from that low, which formed there around 106,444 on the 17th of October, we've moved up already a little bit, right? Back above 111K. I saw that yesterday. So anyway, we are in an environment still, I think, where fear is dominating. Yeah, there's a lot of, people are bored and fearful. And it's not great. It doesn't feel great right now, but it is the right environment for local lows to form. Now, this indicator is not an absolute bottoming indicator. It doesn't tell us when exactly a low forms. And please note, in bear markets, it can flash all the time and there will not be a low. But as long as we are structurally in a bullish market, we haven't got any, we have no evidence, that a major top is in. And therefore, we can use this indicator to identify the spots where people are fearful. And I mean, as I said, I showed you that exactly when we were at the low, and the market has moved up since then quite a bit from that low into the Tuesday high. That was around a 10% move up. And okay, we corrected again, but held a higher low, and we're still up like 8%. So I think it can help to, with Elliott Wave, we're already measuring sentiment, right? These are basically just patterns that give us a good idea of sentiment on all wave degrees, on all time frames. But if we can use an indicator like the fear and greed index in addition, it can be particularly helpful, because especially then if you see some indicators being oversold, which was the case on the 17th of October, it can help even more. Like the RSI, for example, on the 4-hour time frame, Bitcoin was oversold and we hit support. And I told you that we are, I mean, I didn't say we're not in the bear market. I said we have no evidence for it. Yeah. So I remain focused on higher prices until the market tells me I have to focus on lower, because the larger trend that we've been watching since 2022 is still up. Now, if you're interested in checking out Bitcoin Magazine Pro, they are one of our research partners. We negotiated a 20% discount for you guys. So if you check it out, or if you want to check it out, you find a link in the description. I also put it for you in the comment section. They've got lots of cycle top indicators as well, which are quite interesting to follow. So what is now important from an Elliott Wave point of view? What is important is that we are tracking, first of all, a resistance area which has been respected this week. So last weekend, around the same time, I told you which resistance will likely become relevant this particular week. And it was this resistance area, right? 113,460 to 121,750, because it was already, that was already after the low formed. So on Friday the 17th, we also had a lower low. And so last Saturday, we were able to put this resistance on the chart. Now, this resistance, we expected it to be reached this week. It was reached, yeah. But maybe this B wave is still unfolding. So this is the orange B wave that you also see on the smaller time frame. We're going to take a look at it. But just a reminder, to really confirm a bear market has started, I need several warnings first. Like a decisive break below the 55-week EMA, which is at 98.5K. Not happened. Even another low is possible without giving us that warning for a bear market. I would need to see a corrective rally and a strong impulsive rejection. Second warning, and a break below 83K. Third warning, full confirmation comes with a break below the April low. But then again, waiting for confirmation isn't always productive because it's already moved by then, right? Everybody knows by then. So we are currently still in this sideways range, grinding here. Now, obviously with the market, it showed extreme fear. So the potential is that a meaningful low already formed. That is also what Elliott Wave tells us, which is always key, right? That's always leading for me. So again, I'm not bearish, right? I still prefer another high. What could happen is, though, one more low. That's not bearish. That's just pointing out, look, there's a potential for another low. But I also said to you yesterday, we actually see something that looks like a 5-wave move up. So as long as we're holding this micro support area that I showed yesterday, or nano support, which is between 107,900 and 110,086, we might still go higher. For now, the market, it hasn't really moved much over the weekend. What is important from a bullish point of view is that we break above initial resistance. It might not happen this weekend, but this will be something to watch this weekend and early next week. 111,240 to 112,485 is resistance, first resistance. If we can break above it, the door to 117,611 in the orange count is wide open. And obviously from there, we could even extend higher. But let's first see if we can break above initial resistance. Another setback into this micro support area, which was already tested yesterday, is possible. So 107,907 is the lower boundary, and therefore very important short-term support. There's the update on Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, make sure to also follow us on X for additional charts, updates, news. Sometimes you get videos there first before YouTube. I think yesterday's Bitcoin video I uploaded there first, so check it out. Link is in the comment section. Thanks so much. Bye-bye.